Hello everyone and welcome to Business Incorporated. It is Thursday, December the 22nd. I am boasting Mafaye on the program. Coming up, South Africa's banks have had a swell time in 2016, but Bloomberg report says 2017 may not be as rosy. The Italian authorities need some $2 billion to prevent the collapse of the banking system. Details from Frankfurt in a few minutes. And sweet crude prices remain sweet as 2016 gets ready to a close. We check out a trading week so far. Now let's get started. South Africa is a bright spot for banks at the continent in 2016, with stocks shrugging off the nation's economic woes and heading for the third best performance in the past 10 years. And that's according to a Bloomberg survey published today in a report. South African banking index on the GSE has risen some 25% this year as interest rate increases boost lending income, commodity prices soaring, and the rand rebounding. The survey shows, however, that in Nigeria, 15 banks fell 33% on average, and 11 listed lenders in Kenya slumped 29% in the year. Now, the Bloomberg report says South African banks' index price-to-earnings ratio is 11.7, less than half that of the country's FTSE GSE all-share index at 28.7. Stock markets in Africa, some of them are trading mixed this Thursday. Here in Nigeria, the general index reverses losses to trade in the green. A little before midday, the index was up about 0.1%. Look at the rest of the continent there. The South African GSE in the red, 1.06%. The Egyptian stock market coming back strongly in the green, 1.09%. And the Kenyan stock exchange Wednesday closing 0.2% in the green, 130.76. Look where we are right now this afternoon at the Middle Eastern markets. Some markets there in the Gulf region barely moved in quiet early trade today before the announcement of Saudi Arabia's 2017 state budget expected later in the afternoon. The Tadawul main index was up 0.1% in the first 40 minutes, with much of the activity focused on second-tier stocks such as Saudi printing and packaging. Shares higher almost 5%, although Saudi electricity was up almost by the same margin. See the rest of the market there with the Abu Dhabi at 44.67. That's the main index. The Dubai Financial Market 35.20. The Qatar Stock Exchange 10,390 on the reading, and the Saudi SE, the Tadawul 7,057, up by about 0.2% on those stocks we mentioned earlier. Okay, we're the same time zone with the Central Europe, so the markets there opened lower today as trading desks began to thin out on the last full day of work for London's financial sector before the long Christmas break. Are we seeing, therefore, the same countdown to the long holiday weekend in Frankfurt? Joining us live from the DAX Stock Exchange is my colleague, Conrad Bilson of the DWTV for Channels Television. Conrad, good afternoon to you. It's the final 48 to Christmas. Now, give us a general sense of the pre-holiday trading day.
Well, Wilson, of course, things are getting calmer here as people working at the exchange, working in the banks, concentrate more and more on buying the last Christmas presents instead of buying shares. But I can tell you the general mood is not bad here. The German DAX, the share index, is not very far away from a yearly high, from the highest point of this year. German mid-caps, which are, companies that have medium-sized capitalizations, which are grouped in the German index MDAX, they are on the highest valuation ever. And in New York, the Dow Jones Industrial Average, the world's leading stock market indicator, if you like, also not very far away from a record high, slightly below 20,000 points. So you can imagine that the general mood among investors is not bad. But I have to say, of course, on this very high level, the first concerns are also coming up whether or not we shouldn't brace for a correction, for a wave of sales of shares, simply because investors might be inclined to take some of those profits that they are seeing right in front of them. Reason to believe in a correction, of course, comes from the look towards the past. If we look at the end of 2015, for example, last year, share prices had been rising nicely until the end of the year, but then during the first 6 weeks of 2016, the German DAX lost around about 20%. Of course, there are people here who are concerned that this, something like this might be happening this year as well.
Well, Conrad, that's very interesting. But let's chew over some corporate news in Europe, in the news since the day started. Switzerland's Succelia has officially entered exclusive negotiations with this American pair, Johnson & Johnson. Meantime, France Sanofi is seen as another possible contender for Actelion buyout. What would this buyout mean for these European companies as they stretch their hands grabbing their US colleagues?
Well, a lot of money is at stake here. We're talking about a potential value of this transaction of around about 30 billion US dollars. And you indicated, you know, that American players are involved, European players are involved here. This story illustrates quite nicely that all the talk about forming large European players, large hubs, in different industries is something that, you know, politicians like to talk about. People on the markets and many business people think completely differently. Here in this case, Actelion is likely to be taken over by the American Johnson & Johnson rather than the French Sanofi, because it brings more benefits to the Swiss company Actelion. The founder of the firm, Jean-Paul Clausel is a cardiologist, and he is said to follow two goals with this takeover of the company he founded. He wants, of course, to take as much profit as he can, but he also wants to continue with the research part of the business, with the scientific work Actelion has been doing. And it looks like he can do this much better with the American partner than with the French Sanofi. And this is, of course, something that people here are discussing. Where else are we going to see partnerships that bring more benefit in terms of business and not so much in, you know, old school national thinking?
Okay. Let's round it off with the troubled Italian banking sector. $2 billion is what the news wires says the authorities would need to put on a standby to prevent a system collapse. No thanks to Monte dei Paschi in the news. Shares now almost 8% in early trade Europe today. So it looks like the authorities would have to grapple with this banking sector crisis on one hand, while the political problems are there also to resolve. Put these two together. What's the news from DAX, from the Frankfurt Stock Exchange today about how the Italians are handling this prevention of system collapse?
Well, Bosun, I can tell you suspense is on the rise here, because Monte dei Paschi had originally reckoned that the end of this cash call, the end of this capital increase process would be 2 p.m. This Thursday, 2 p.m. of course Lagos time, Italian time, which is also Frankfurt time. And this means that everyone here is now expecting what Monte dei Paschi would have to say. This is one of the famous too big to fail candidates, this bank, which means that people here are convinced if Monte dei Paschi really fails to raise fresh capital, and if it's not going to be bailed out as a consequence by the Italian taxpayer, then the systemic risk would be there. The bank sits on 46 billion euros worth of non-performing loans. If all those non-performing loans were declared to be defaulting, of course the question would be on the markets, who's next? Where else can we see large accumulations of bad loans that you know, are getting into the danger to be exploding? And that's why this is very important, and that's why it's probably okay that the Italian taxpayers, that the government stands ready to step in and bail out Monte dei Paschi.
Okay, Conrad, it's just about 20 minutes to the top of the hour, 2 o'clock, where we hear from Monte dei Paschi in Italy and what the authorities would say. So get back to the newsroom and we'll get to talk about that tomorrow, what happens to Monte dei Paschi. Conrad Bilsen, thank you very much from Frankfurt Stock Exchange there for Channels Television on behalf of GW Television. Of course, as you've heard, traders are clearing their desk for the long Christmas holiday. Asian stocks lost ground today as volume continues continued to thin after the Dow failed to reach the 20,000 mark overnight. It looks like the 20,000 mark may not happen after all in 2016 for the world's #1 stock index. Check through the Japanese benchmark Nikkei 225 down about 0.1%. The South Korea's Kospi also negative about 0.11%. The Chinese markets were mixed. The Shanghai Composite was up about 0.1%, a little less than that, while its closest cousin, the Shenzhen Composite, ended 0.133%. In Hong Kong, the Hang Seng was down almost 1% by 3 p.m. local time. It's about 7 p.m. right now in Tokyo. Meantime, the Australian markets were exception on the island, with the ASX 200 up about 0.5%, and the New Zealand's NZX 50 was higher about 0.75%. And of course, you heard that the U.S. stocks market is still pointing to a bit of a lower trade today as traders eye the release of a big batch of data. The Dow Industrial Average has so far disappointed, sketching around 20,000 for the last couple of days, unable to make up his mind whether to breach 20,000 before 2016 gets to a close. So what's on tap today on Wall Street? Initial jobless claim, the durable goods data, and the final revision to third quarter GDP, all out at 8:30 in the morning Eastern time. That to be about about 3:30 Nigerian time in the afternoon, not so far away from about 2.5 hours. That's around the opening bell on Wall Street, and those data will likely be part of the trading theme for today. Then we're looking at personal income, consumer spending, consumption expenditures, and other leading indicators coming out at about 10 a.m. Eastern in the U.S. That's the stock futures that you're looking at there about an hour ago. The Dow Industrial, the S&P 500, and the NASDAQ all pointing to a lower open on Thursday, the fourth trading day. Let's check back on the African continent, some economic news. The European Court of Justice has ruled on Wednesday that two political and trade deals between Morocco and the European Union did not apply to Western Sahara and are still valid, avoiding a diplomatic dispute with Rabat. That's the capital of Morocco. The court said that the two agreements from 2000 and 2012 do not concern the Polisario Front, which wants independence for Western Sahara, and had challenged the accords on the grounds that Rabat was benefiting from the disputed territory. The top court's decision overrules a 2015 decision by the lower general court that the trade deals were void at the time, prompting Morocco briefly suspending contact with European Union institutions and the EU to lodge a legal appeal. Now, the EU and Morocco have struck agreements allowing duty-free quotas for agricultural products such as tomatoes and granting access for European vessels to fish in Moroccan waters in return for financial assistance. Now, the two sides also began negotiations in 2013 to form a deeper and broader free trade agreement. Now in Central Africa, six-nation economic bloc called CEMAC will see economic growth of 1% this year. The regional central bank just says, revising downwards an October forecast of 1.7%. The slowdown is due primarily to a prolonged slump in global oil prices, which we'll talk about later on the program. Now, the resource-rich zone includes Cameroon, that's Nigeria's neighbor to the east, Gabon, Equatorial Guinea, Chad, Congo Republic, and Central African Republic. Growth in CEMAC was 1.6% last year, according to the International Monetary Fund. In August this year, the IMF projected 1.9% growth in 2016, but says that from 2017 onward, CEMAC growth was expected to reach 3.5% a year as oil prices gradually recovers.